Welcome to Wall Street Confidential. We are revisiting a phrase we haven't heard in ages, Mutual Fund Monday, and why it might be giving us some clues as to where the market's going, perhaps higher. Welcome, Jim.
Farnoosh, good morning.
So what is Mutual Fund Monday, first of all?
Okay,
for those of us
in the old
forgotten.
days, what happened is that you made so little money by having cash on the sidelines that money sought equities as a place to be. Now, equities became so risky, and there was so little money to be made, that people decided, beginning in 2000, 2001, that equities just weren't a good cash alternative. And then the Fed raised rates dramatically, so it made it so that it was good to be on the sidelines. There's a tremendous lag between when people realize that they're not getting a lot of cash on their investments on the sidelines, and that has to do with the fact that most people most savvy people who can choose among bonds, stock, and cash pick CDs as the cash method, and that's smart because CDs have been able to outperform the short-term treasuries. As these CDs roll over, people now see how little they make, so they're going to, I think, get comfortable with the idea of going back into equities, particularly after we have a good, if we can have put together 5 straight weeks, which we have. That money is smarter than people realize. Initially, it's much smarter. So what they do is they give the money to the hot funds.
What are those hot funds?
Well, hot funds are firms that have invested in agriculture, in natural gas and oil, in minerals and mining, and in steel. And those funds will get more money in. The way it works, the way Mutual Fund Monday starts, is that people see that there's money being made again in the stock market. And hot money goes into the hottest areas. The nature of the hot area mutual funds is that they don't think that there's any real roof to their stocks. That's very typical, and a lot of shorts really hate that. Like, if you're in a natural gas stock, okay, it's a good example. That's the hottest group right now. Like, natural gas is at $10. If you're a mutual fund buyer of these, what you're thinking is natural gas is going to go to 16, where it would be fair value historically versus oil. So it doesn't matter. You just buy these stocks every day as the money comes in over the transom. Then the next step is that people say, wow, the money's being made in the market, but I'm not going to pick individual stocks. I'm going to move into S&P 500. And so that's the next stop of Mutual Fund Monday. We had Merger Monday for a long time. Right. This is very different and far more sustainable than Merger Monday. Merger Monday had to run out eventually because it was private equity money. I think that I'm not looking for mergers to be a major part of this next move up.
All right. Thanks so much, Jim, on Mutual Fund Monday. This is Wall Street Confidential. Stay tuned.